This is the last low risk opportunity for investors of Bitcoin and cryptocurrencies to set themselves up for this last stage of the cycle. The last 11 days has seen Bitcoin rise 21%, $11,500 from the low. And we know from back at the beginning of that period, the market sentiment was extreme fear. So moving forward, this is what we want to look at with our crypto and Bitcoin portfolios. I'm going to cover price analysis today for some of the majors and of course recap what's going on in the traditional market so that we have a broad overview of the macro cycle. You've come to your home of macro cycle analysis with me, Jason Pizzino. We're going to cover Bitcoin, cryptos, the stock markets, and the real estate cycle. You guys know the drill by now. If so, hit the like button. If you are new to the channel, I will explain each of the segments along the way. So make sure you hit that subscribe button so you don't miss any of the content throughout this major cycle. All right, guys, let's kick it off with the agenda. Seen a massive day up for BTC. A quick look at the agenda here. Last low risk opportunity. Some might argue that this could be a medium risk. I still don't see it as a high risk yet, but that time will come and the masses will get destroyed once again. So don't be in that basket. Have some plans set up so you can get around that and avoid being part of the exit liquidity. Number two, Bitcoin end of cycle prediction. All right, I'm gonna look at this in a future video so that we don't make this one too long. Number three, Bitcoin left or right translated. Essentially, we're almost ready to put this to bed for it to be a right translated cycle. But I'll go into that in a little more detail in a second. That is going to help us with our projection of the rest of the cycle here for Bitcoin and cryptos. I've got Ethereum and Solana for you. Total cryptocurrency market cap, alt seasons, again, catching everyone off guard. This is what I think is coming next, and I'll show you how so. Low versus medium versus high risk. We need to learn which one we're at. And then, of course, the disclaimer here is in regards to the traditional markets. The way I see the markets, Bitcoin and crypto are the gambling space for everything. You need to see more money coming in to traditional markets like the stock markets and of course real estate. So people have more money there and some of that money flows out of that bucket into our crypto and Bitcoin. All right, so that's the stock market and we're in an election year. So the 18.6 year cycle, you guys are getting very familiar with this, I hope. We're in the winner's curse stage of the cycle. We just had an update with our members this morning, looking at many ways and reasons why we're in this cycle and how you can see it in the future again. So you might be in your 20s, 30s, maybe you're in your 50s or 60s, and you might only have one more of these cycles left in your lifetime. Be sure to understand this because this will help you set up for your retirement, whether you are in that last stage of life or you are in your 30s or 40s setting up for that last stage of life. If you don't understand this, you'll end up like 90% of people that struggle throughout life to have enough finances, have enough money in retirement. We're in the winner's curse phase, looking towards the next couple of years as this market continues to rise, this meaning stock markets, real estate, and we're seeing this for the final leg of Bitcoin and cryptos before a pretty significant decline. Now that decline is probably going to last longer again than the previous decline that we saw in roughly sort of 2020 and obviously for the stock market 2022. And this one I think is going to catch a lot of people off guard, primarily US and Western developed countries. We'll get to that later when the time comes. But for now, a couple of years in this winner's curse phase for real estate and the economy. As I said, money flows out into Bitcoin and cryptos. So here it is flowing out into the stock markets, new all-time high again, and we zoom in, a new all-time high daily close for the S&P 500, the E-mini futures here. Now, I like this as a note. It does not pay to be fearful in a bull market. Just keep going with the trend and keep riding the trend. We're in a macro bull market. Stock markets continue up. There is minimal shorting opportunities here or times where it's a good idea to sell out of entire positions because some might be fearful, and the stock market is definitely showing that in terms of price. That's the same deal for the S&P 500, up 18.7% since the beginning of the year, and a better measure, I know the media loves to cover and beginning to end of year numbers, but that's not a great way to do things. It's better to look at it in terms of cycles themselves, so from lows to highs. And from that October low, that was basically, if you've forgotten already, Israel and the Middle East, or Gaza or something going on over there. There's always something crazy happening. That price increase 38.7% to that top. And we take it back to October 2022, so coming up to nearly 2 years since that particular low, that is now up 63.6% from the low to the current top. That is a pretty stellar ride for the stock market. So that's the S&P 500. The NASDAQ, 20,600, slightly lower here because some of the tech stocks have had a slight pullback after pretty significant days last week. Nonetheless, trends are still up, macro trends are still up, and we haven't seen any macro breakdowns yet. We've got key levels to watch, but essentially what this is about is understanding where we are at in the overall cycle. As we get closer to the peaks, we're going to look at larger term timeframes to see if we're getting any significant swing breakdowns. That is the Gann swing indicator. Link to this is in the top of the video description right here. 7-day free trial. Emails to come out to help you how to use that particular tool. And also coming out today, absolutely free in the next 12 hours, the free crypto and economic report. Check your emails if you are on that list, and if you're not, subscribe to it right there. Okay, so that's the NASDAQ. The Dow Jones also hit new all-time high again. Check this out on the daily. And then the Russell 2000 is having a bit of a boost here. So even the laggard stocks are coming back day after day. Yesterday we checked the market from Friday, and now last night's data, last night's trade action here pushed the price higher again. What's happening, from what I can see, is that investors are beginning to chase the lagging stocks, and they're trying to rotate out of their winners and put them into the losers. This happens over and over again, and I suspect it's going to continue to happen throughout this cycle. They're going to take stuff from winners and then they put it to losers. It's an old trader's saying, are you putting good money after bad? Not my quote. I can't take credit for that. It's just, if you understand that, you can understand what's happening in the market, and that's why you don't see Warren Buffett taking good money and throwing it into bad stocks. This is just crap that media personalities do, and all the analysts that you see on CNBC and all these other guys that are trying to tell you to short the market or find cheap stuff that is crushed in their price at this stage, and they avoid the stuff that's already strong or breaking into new all-time highs. It's the same thing over and over again. Traders tell us this in particular trade sayings, quotes, bullish market quotes or bear market quotes. People want to listen or they don't listen. Entirely up to you. So that's what we can see with the stock markets. The Aussie market also hit a new all-time high yesterday, and hopefully we see another new all-time high today, just for the sake of hitting high prices. Now, what's pushing it up? Less stocks. We've heard that breadth story now for nearly 2 years, going all the way back to 2022, which is where I've been covering it here on the channel. Breadth meaning less stocks pushing the price higher or pushing the indexes higher, which the analysts, well, can we call them that, were saying that that was a bad sign for the markets, and 7 of the stocks were pushing the indexes higher, and the other 493 of the 500 were going lower. It's a bad sign. 2 years later, I know which side I'd rather be on. That is something for you to decide for yourself. Breadth has not been an issue thus far, and from what we just said here, these are the bottom stocks. They're trying to catch up now. This is like a late stage move. That's why I keep coming back to the winner's curse phase, because it is a late stage of the cycle. We've been up for nearly 14 years from the economic low of around 2011. Stock markets, of course, in the US were 2009, but we're looking at real estate and the economy here. We're seeing signs of the last stage, those losers starting to catch up. Okay, Apple's another new all-time high. Amazon up there, just having a slight pullback, but way above still the previous old all-time highs. Microsoft, same sort of deal. Nvidia, similar deal here. Have been putting in a slightly lower low on the shorter term time frame. Keep an eye out for 108 and back to these highs here around 96. And Tesla also trying to come back, but maybe setting up a lower high here. Not to worry on the short term, long term stuff still seems fine. Looking at the fear and greed index, it is climbing now. Overview here of greed. Timeline shows that it was at fear just 2 months ago, and it was still sitting around fear, trying to climb out of that market sentiment, and it's finally got there. It's into greed, and the price is up quite significantly, about 13% on the S&P 500 from that point there. There it is. That's the fear, the extreme fear that came into the market, and it rose out of that level, and the market was still fearful. You got to question what people are doing in the markets often when they're basically going against where the price is going. Stock price strength is still in extreme fear, which is what we just talked about as well. More stocks going to lows, 52-week lows as opposed to 52-week highs, which then affects the breadth here, looking at our McClellan volume summation index. So it's still in fear because there are less stocks or less volume pushing the price, the indexes higher. So few stocks pushing it higher. Nonetheless, it's been like this for a very, very long time. I know I'd rather be on the side of price because that's where I make my money, not on the side of headlines telling me that markets need to collapse. So that's a look at the broad markets. Can we see more of this flowing into cryptos now? I think so. Look, we're here. Greed at 65. After just a few days down, well, about a week or so, right? Into the fear zone, it's now bounced out of that and it's hit greed again. We talked about this at length in yesterday's video. Let's continue to cover this to see how the market responds. Are we still going to see some volatility in the market sentiment coming out of a significant low now? So we've got that bottom at 53.5 with the market sentiment hitting extreme fear, and now we've quickly risen out of that on the back of Bitcoin going higher. Who's to the rescue here? Well, we got Larry Fink embracing crypto now, and asset managers. Bitcoin ETF is now worth nearly $20 billion. So I believe he's number one there, taken over from Grayscale, their Bitcoin trust. So anytime now Larry Fink is the talking head for Bitcoin this cycle, I would expect that this will continue into I think we're into that last phase of the cycle. Maybe for Bitcoin, Bitcoin and crypto has got about 12 to 18 months, maybe slightly less. Obviously, wait and see. I don't know for sure, but I do see us in this final stage. And now what's happened in previous cycles, if this is your first cycle, there'll always be a talking head that the media points to, whether it's these market watch websites, whether it's the crypto websites like Cointelegraph, whether it's your beloved crypto people on YouTube that continue to look at certain news headlines and the way they use these things. And this is the sort of thing that pumps up the peaks every single time with people who are entering late. And as I said, in terms of where we sit in this current cycle, I've called this video something like the last opportunity to enter at a low risk stage or maybe a medium risk stage. As we get into the peak where it gets extremely high risk, but everyone's excited for the party and money's getting thrown around everywhere. Everyone's making money off garbage coins because, of course, we're in the winner's curse phase. Everyone thinks they're a genius. The media throws more of this our way with heads like Larry Fink. Maybe Cathie Wood comes back. Maybe Michael Saylor's in the headlines again. And they'll start telling us that Bitcoin will be worth $1 million, $1.5 million, $2 million. And people start to believe that. And that's how we end up at those peaks time and time again, with the majority believing that there's further to go because ETFs are buying or whatever other reason happens. I know I've talked about this often, but I think it's the most important thing to prepare for it, because every single time it's so easy to get swept up in it and miss out on those profits. So if you can prepare for it, it's going to be much, much easier. Preparation can look like many different things. The free crypto and economic report is one way to prepare. Obviously, TIA Premium is the best way, in my opinion, to prepare. But of course, I'm going to be biased with that. So check out some of the reviews that our members say. I wish I found this sooner. Even you guys as the viewers have often said that you've wished you have found this channel and my brother's channel sooner as well. And you can also find all of these reviews, if you're still unsure about TIA Premium, in the free Discord by signing up to the free crypto and economic report, and then you'll receive a link to sign up to the Discord to check out the reviews from many of our members there. The March 3-day down signal that we talked about here, we are now in the time frame for a new all-time high. The timing that I suggested there was 4 to 6 months. We are now into the 4 months. So between now and maybe September, we start to see a new all-time high, or at least a test of $72-ish thousand. Remember, there is a couple of months here. We could see price go a little higher, then come back under. This takes time to play out. The point of this is to be prepared for that next stage. And I think the next stage will take us past the old all-time high, whether it's in this exact 2-month window or a little later. I'll let the market do the talking. So far, this has worked out very well for us so that we remained level-headed through, I guess, a market correction, a balanced market correction. Elliott wave cycle. Michael covers this the best that I've seen in the entire space, so hopefully it saves you some time by just following Michael. Link is in the video description, and his explanation of how Elliott wave works breaks it down very, very simply. And from what we can see at the moment is we're into this 5th and final wave. I'll leave it up to you to go and check out this video as he discusses what happens in that 5th and final wave, so you can do that after this video. For now, let's have a look at the low and medium risk entry opportunities here. Looking back at the previous cycles, I've labeled these here as low, and then you've got somewhere around the all-time high to that breakout of the low risk. So you could almost consider it low medium to around medium. But any time after that point, when you start to get into these big blow-off moves, high risk. So ideally, you're in before that peak, and if you are having to get into the high risk, you must have stops in place, because that's where a lot of the good work can come undone. So even if you're not able to make any profits through that period, at least you're not losing all the money you came in with. Now, looking back at the previous cycles, I'm looking at areas underneath the old all-time high, or at least a significant peak, as they tend to grind at a slower pace compared to once it breaks out significantly of the all-time high. Right now, prices at 64,500. The previous old all-time high was 69,000 in November 2021. So essentially, we're still underneath that particular price range, although we did break out temporarily through March and April at 72 and 74k. Nonetheless, the medium term here is around this price range and the structure of the market. So that price range is about $1,000 to about $5,000. And then after that point, that's extremely high risk, where basically the market just goes parabolic with barely any pullbacks. And once that peak comes in, all of that hard work is essentially undone in almost the same amount of time, if not quicker. You can see how Bitcoin came right back after putting in that peak, wiping out all of those gains. That is what I mean by high risk. Essentially, it's that time frame there. Now, if you're unsure of that, the best thing I've found to use is your Gann swing indicator and the 50% levels that we look at. Lows to highs, cut a line through the middle, gives you 50%. If you see your asset, Bitcoin, crypto, stocks, whatever it is you're in, start to break the 50%, probably a good sign that the market is going to roll over. And you guys that have been around since 2021 know that's what I talked about on the channel, publicly here, and on Twitter, when I sold out of Solana as it broke down from the 50% level. So something that you can use in your trading to keep you safe in terms of the low risk opportunities. As you can see from there, the pattern is still grinding higher. And then you look at it in terms of the previous cycle, again, grinding higher. And then you start to get this big blow off move. And here, it looks like we are in that now, but it will probably look different wherever this peak comes in. And you'll start to see that this is potentially the low risk and extremely low risk back here, as we again went through on the channel. While the masses were looking for a major correction there, you remember all the recession calls and the breakdown of 12 or 15k down to 12k Bitcoin, and when Bitcoin hit 25k, they were expecting another crash to 9k or 3k. It didn't happen. And from this point, it's potentially in roughly around that medium term range where maybe the price over the coming years peaks and comes back to this range. That's what I look at it in terms of medium. You might break even or lose a little, but I don't see this as the high risk stage where you could potentially lose a lot. And I think that high risk stage is coming once we break out of these tops. We're only going to know this on reflection of the markets in the coming years, but for now it seems like a similar sort of pattern is occurring from what we've seen in previous cycles. We can go back all the way to 2011, 2012 as well. This basically grinding higher. Take off the swing chart here, and you can see it started to break out and really went ballistic from that point. So ideally, we don't want to be entering our largest positions when the market is going parabolic. The largest positions need to be entered while the market is still quiet, and that essentially looks like your fear and greed index hovering below neutral for quite a substantial amount of time, so that you have time to enter the positions. So in terms of the agenda, we've got the disclaimer in. We have looked at Bitcoin. We're going to look at this in a future video. Left or right translated cycle is where we are at now, and this is now breaking into green. So from yesterday's video, the month of July was red. It's finally broken past that. So whether we get a green or a red, the benefit of the price action now is that it has broken through that open of the month. So it's done it, meaning that there will be potentially less resistance to that price as we close out the month. So it can still close below it, but the fact that the price has pushed past it already in the month starts to break down that resistance level being $62,600, which is a good sign, especially for the shorter term analysis where you want to see Bitcoin closing above roughly $64,000 for the longer term here. So left and right translated, it's almost there to be a right translated cycle, essentially longer to the upside than it is to the downside. It's just a timing mechanism for the market, and also shows strength in the longer term cycle. We've been down 4 months, another good sign here that there's been some good time to consolidate. This will be confirmed when the top is decisively taken out and you've got some closes above $74,000 on a monthly basis. So that's a very specific rule that I'm using for the market to identify that strength. Looking back 4 months ago, there was a lot of talk of this cycle ending early as Bitcoin broke to a new all-time high in March, and I was trying to suggest at the time that it was unlikely that would be the case because of our, I guess, unique, maybe exclusive look at the 18-year cycle and Bitcoin together, that it was highly unlikely that Bitcoin would peak in 2024 and that there's probably more time to go because of the macro cycle itself. A lot of people don't look at everything all together. They just pick one or the other and they think everything works independently. That hasn't been my experience from investing over the last 17 plus years. Everything works together, and while there's liquidity out there, liquidity essentially finds its way into riskier and riskier assets as the cycle goes on, because investors are looking for higher risk plays because the gains have come out of the lower risk options. That's essentially how it continues to run. So that's why I suggested that probably not going to see a left translated cycle, and that will probably continue higher. We've looked at low, medium, high risk for BTC, so really need to understand that. So these are the last two left: total cryptocurrency market cap, alt season, and then Ethereum and Solana. Catching everyone off guard. I've got the price chart to look at for Solana on that because of what happened last cycle. But 650, around 650 billion for the total cryptocurrency market cap minus Bitcoin, ETH, and stable coins in this case. So using our TIA crypto total market cap, excluding all these things here, you can see that that price comes in roughly around 650 billion, potentially where you'll start to see a few more fireworks within altcoins. So setting positions here would be quite nice. Now I've got a little bit of a special price forecast here. I don't typically like doing them because of how explosive the moves can be, and I'm usually conservative on those targets because I want to walk away with a profit. But if you don't want to be conservative, I mean, totally up to you. Top to the next top, so the cycle of 2017, 2018, because altcoins went a little higher in that January period, Ethereum in particular. So using that top to the next cycle top in November 2021 gives you about a 210% gain, just top to top. Now, if we're to use half of that for the next cycle, top was around $1 trillion just for altcoins to the next top, just doubling it essentially. You get into about $2 trillion. I know there are going to be many people that say that this should go much, much higher. Okay, maybe it does. And if you're going to do something similar to the previous cycle, well, that's pretty easy maths. You would just go to 3.1 trillion for the total cryptocurrency market cap. So how do I use this? What's the practical thing here apart from enjoying the ride and talking shit along the way to the peak? How do you actually make money from this? Maybe start to scale out of positions as it gets to 50% higher, 70% higher, or 100% higher from the previous peak. Just looking conservatively here. If you don't want to play it conservatively, that's absolutely fine. You're here to make a life-changing wealth from $1,000. By all means, do what you need to do. But you want to walk away with something for your hours. Remember how many hours you are spending on YouTube, potentially watching my 20 to 30 minute videos or someone else's videos that do ridiculously long streams for an hour or 2 hours on the same bullshit. Up to you, okay? You're putting in a lot of hours here. I would want to at least get my money back for the time that I'm putting in here. So that's why I'm looking at something a little more conservatively, walk away with a good chunk of change. So if it does get to the 100%, this is just the total cryptocurrency market cap. Don't confuse this with one of these tiny altcoins that only does 100%. What I'm looking at here is how is the rest of the market performing, meaning this market, and then comparing that to your individual altcoin. So if the total cryptocurrency market cap gets to 100%, 150%, or even 200% of the previous top, what does that, firstly, pattern look like on the total cryptocurrency market cap here? And then where does that position your altcoin? Maybe your altcoin has done 500% by that stage. Probably not a great idea to be getting greedy if you're seeing that the market has repeated a similar move top to top into this next cycle. And on top of that, because it could go further, but if you're seeing one of these blow-off moves and exhaustion in the market, if you're starting to see a blow-off move here, then big exhaustion, it might be interesting to begin to take some profits. You don't need to sell out of everything, but just keep this in mind as a proxy to where the overall market could go. So if your altcoins are running out of steam while the rest of the market is running out of steam, maybe an interesting time to take some profits. Bookmark this, cut this section out if you need to come back and replay it over and over again. I want you to win here and take some money from the markets. Even if you take it out too early, you've taken profits, which you know or should know that more than 90% of people aren't able to walk away with any money from this, and they end up losing money. So even if you come out of it too early, you're still winning at the end of the day because the majority do not, and you're probably taking someone else's money. There's been some emotional damage to the downside, and now we're seeing a little bit of a climb here to the upside on pretty good volume, mind you. Ideally, I want to get above 165, and that would then cement the price action for a multiple days closer there, cemented above that 165-ish level. At worst case, even if it was to hit that and come back down, it would probably be putting in a higher low above about that 130-ish mark, 137 mark. Looking back in history, so where the majority have missed out here, this is what this video was specifically about, the capitulation that fooled everyone 4 years ago. Looking at Solana, 4 years ago, it had this pretty significant dump. And then after the dump of 80-odd%, it took off pretty quickly. That was a 300% move. And so by that stage, it catches a lot of people off guard because they think, well, 300%, I'm going to look elsewhere because this market's already run. I've got nothing else to do here. But nonetheless, it kept going and then kept going and pulled back and then kept going. And by the time you look back, 300% didn't really mean that much because you could still get in at sort of $7-8 and you had all this room to move to get a profit. So catching off guard, one, fast moves at a lows are what you want to see for a bull market, and we're starting to see that with BTC. I still want to see some more confirmation. And two, even if a crypto has gone up substantially, have invalidation levels to the downside, but even if it has gone up substantially, relatively speaking to what it just did, then there is still the possibility that it goes further. So you don't have to feel like you've missed out. And the market, social media will tell you you've missed out. It's too late. What are you doing buying something at $4 when it was $1 a few days ago? Well, because it could go from $4 to $200. So it's important to try to put those thoughts aside and just play the price action on the chart. So that's what I wanted to explain there, and I think I'll come back to that lesson a lot. It's something that I've had to learn along the way. Don't worry so much about, oh, it was $4, I should have got it at $1, because who knows, maybe it goes to 40, 80, 120. If, Solana, as I said, looking reasonably all right here, and then over to Ethereum on the weekly chart here. The close above 34.50 is going to be quite good for this price action as the bull market carries on. So far, it seems like it's almost confirmed above the safe level here of $3,200. And what I'll give you here as a bit of a fun and dance again, just looking at percentages from top to top. So a bit of a price discovery target. We take these two, 250, 220, average 235. Let's do half of that to be conservative, roughly 115, 117. That takes the price action from top, the previous all-time high, to maybe the next all-time high, 10,700. Do you think Ethereum's going to reach 5 digits in this cycle? Do you think, let's call it 10 grand, do you think that's too conservative for Ethereum? Do you think it's going to go more to, say, $20,000? Let me know in the pinned comment down below. Is 10 grand too conservative? Give or take a couple of grand either side, maybe 8, maybe 12, right? Or do you think it's got a lot further to go? Do you think it's going to do more like what it did in the previous cycles, 200+%? That's going to take it all the way past $15,000. Maybe if you want to go to 300%, it's going to take you to $20,000. So something that it hasn't done before. Comments down below, like and subscribe. Get on that email list if you haven't already so that you're not saying this in the comments, I wish I found this sooner. Thanks again, guys. I'll see you at the next video. Until then, take care and peace out.